right. Hi, I'm Tim Walker, principal broker of the Faris team mortgage brokerage. I'm here with Rochelle Lays, the chief sales officer of the Faris team real estate brokerage. How are you doing today, Rochelle?
I'm doing okay. How are you, Tim?
Pretty good. Pretty good.
Good.
We're just starting the lockdown here, and I hear some of your clients have some questions on how that might impact their financing.
We have a lot of first-time home buyers that are wondering how this will impact their financing if God forbid they are temporarily laid off. Let's say they do have those questions as to can they still get financing?
For people that are temporarily laid off, generally speaking, they're not going to be able to be approved for financing until they're back to work. So even though they may be laid off right now, we can start preparing for financing once they are back to work, as if they were back to work now.
Okay.
With people that are self-employed or have variable hours that are being affected by the lockdown, sometimes that is decreasing the amount of house they're going to qualify for. And it does depend on the situation, what industry they're in, and how their job is set up. So what I generally am recommending for first-time home buyers is to speak with either their lender or their mortgage broker to see how being temporarily laid off might impact their ability to purchase a home.
Okay, so you say they can prepare now in anticipation of them getting back to work. How can they prepare?
Yeah, I mean, so there are a couple of things to do. What I'm doing with a lot of my clients right now is we're going through the application process and we're preparing an application as if they're back to work. So if they're regularly working 40 hours a week at X dollars an hour, we can put together an application based on that information. So once they are back to work, they can put in an offer right away, for instance.
Okay, so are banks looking at if they were laid off once, could they be laid off again? Is there anything that they should be made aware of into the future if this carries on for a few more months? Is there anything they can do to prep themselves or be ready for it?
Yeah, certainly. Lenders are looking at industries that are susceptible to layoffs due to the lockdown a little bit more critically right now. So they're asking for some more documentation. So things like proof of earning income over the past year is important. Things like bank statements or pay stubs showing that you're continuing to earn money or that you're continuing to be on pace of what you normally would be is something that lenders are looking at right now.
Excellent. I guess what first-time buyers have to tell themselves is this really is, in all reality, temporary. It's a little stop in the road right now, but there are things they can do to prepare themselves and look forward to the future. And the real estate market will always be there. The houses will always be there, and Tim will always be there to help in the meantime.
Yeah, we've got a traditionally strong real estate market here. So even though there's some temporarily people that are temporarily laid off or having to push out their home buying plans by a couple of months, in a lot of cases, it's giving people time to save a little bit more extra money for down payment, or even prepare to get into a larger house bracket. So if they were looking in a certain like townhome or semi-detached,
sure,
it's extra time, especially if they are working, is giving them more time to save money, which could get them a bigger house.
Excellent. I guess when you speak that way, in the meantime, they can start getting some market education in the market, checking out what houses are selling for, knowing their areas. There's lots of things you can do in the meantime to still be hopeful for when they do purchase and get that market knowledge, is what we like to call it with the partners. Market knowledge, get set up in a search and just start feeling things out and know where you want to be, the location you want to be at. So there's things you can do, I would imagine.
Yeah, exactly. And we can take a look at what financing would look like for some of those properties. So what a lot of my clients do will say, well, we just found this property, sales partner sent us this property, you want to go take a look. How much is it going to cost me? So we can run the numbers and go, okay, looks like your monthly payment's going to be X, Y, Z, and current interest rate, that's what things are going to look like. So it allows people to kind of mentally prepare for some of those costs associated with home ownership.
That makes sense. Now, what about clients who are in a home currently, want to refinance or are looking to maybe buy and sell again? Is there anything that they need to be aware of right now?
Yeah, lenders are going to look at people that own homes the same way as they were first-time home buyers with regards to income. So if you're temporarily laid off, you may have to wait until you're back to work. What a lot of people are doing right now is taking advantage of the extremely low rate environment. In most cases, you'll be able to get a 5-year fixed well below 2%. So a lot of people are refinancing just to take advantage of the lower rates. So I'm seeing quite a bit of that. And in reality, people are saving $10,000 or $20,000, $30,000 in interest because of switching from a mid 3% rate to a 1.7% rate.
Mm-hmm. And when they switch like that, there is a penalty, but I guess it's negating the penalties. Now, the benefits are far outweighing the penalty in this case.
In most cases, absolutely. Yeah, with minor rate drops, you don't see that sometimes, but even with large penalties, there was one I did a couple of weeks ago where the penalty was a little over $18,000. which for most people that seems crazy, but over the 5-year period by refinancing to a lower rate, they're going to save over $40,000 in interest. So
Wow.
it was a no-brainer.
Okay, so we can actually encourage people to call you, and it doesn't cost anything, let's say, to reach out to you and just find out and ask the questions and see if you can actually save money. There's a multitude of ways, refinancing, selling, anything that could possibly save you thousands in the long run.
Yeah, absolutely. It takes me 5 or 10 minutes to kind of review someone's mortgage statement and see if it makes sense to refinance.
Thank you so much, Tim. I appreciate it, and have a good rest of your day.
Thanks, you too, Rochelle.